Hello everyone, it's a pleasure to have you join us at French Tax Online, your trusted ally for unraveling the complexities of taxes and financial landscapes in France. My name is Géraud and I'm a French chartered accountant. Do not forget to hit that subscribe button and ring the notification bell so you never miss out on our latest videos. Today, I will explain the different tax consequences of buying your French dream home with a foreign company. Warning to the faint of heart. The 3% tax, its true name being the Taxe sur la valeur vénale des immeubles détenus en France, TVVI, it is better known by the name of the 3% tax. The reason? Under certain conditions, foreign owners of French properties must pay an annual tax equal to 3% of the property's value every year, therefore. Don't panic. In practice, most of these owners are exempt from paying said tax against the commitment to annually submit a tax return concerning the effective owners of the property using the 2746 form. It is highly recommended not to forget to submit this declaration, as failure to do so may result in being asked to pay the infamous tax, which can make forgetfulness very costly. In-kind benefit and corporate tax. French law, both in the General Tax Code and in case law, states that all operations carried out by a commercial company on French territory must be subject to corporate tax in France. This means that if the property is rented out, the company must obviously keep commercial accounts according to French rules, file annual accounts, and pay French corporate tax if applicable. This goes without saying, you might say, and I agree. The slightly more surprising part for foreign owners comes from the concept of in-kind benefit. Indeed, French law, always it, considers that if the property is granted free of charge to the operator, the partners, or any other person, an in-kind benefit must be reintegrated into the account in order to pay tax on the profit that should have been recorded. In very concrete terms, this means that the said foreign company must account for fictitious income corresponding to the rent it would have received if the property had been rented under normal market conditions, and then pay tax on it. Of course, very few owners of foreign companies in this situation actually declare this in-kind benefit, which does not prevent the tax authorities from adjusting a certain number of them each year using calculation methods that are not very favorable to the owners and ultimately result in significant sums to be paid, which seem very unfair to the unfortunate owners. Foreign company and capital gains. Last but not least, the last purely fiscal consequence of buying a French property with a foreign company concerns the calculation of capital gains when selling the property. We have indeed read some absurdities on the internet, such as the fact that these companies are totally exempt from capital gain tax, for example. This is completely false. Indeed, French tax law requires that any capital gain made on a property located on French soil be declared and paid to the French treasury. Thus, no one escapes it, regardless of nationality, whether in a company or in one's own name. The particularity of owners of foreign companies lies in the calculation of the capital gain itself. Indeed, foreign companies are deemed to be commercial companies that have opted for corporate tax in France. As for the capital gain on real estate sales, this will therefore not benefit from the so-called individual's calculation, but from that of companies subject to corporate tax, which is completely different. Without going into too much detail on the calculation, so as not to make this video more not digestible than it already is, let's just say that there will not be holding period allowance. The property will be depreciated, and the depreciation, whether passed in the account or not, will be reintegrated into the calculation of the final capital gain, which will be taxed at the French corporate tax rate of 25%. Let's take a concrete example to help you understand the differences in tax treatment. Mr. X, a British tax resident, bought a charming property in Normandy 20 years ago for the sum of 200,000 euros. He has not carried out any major work since, only maintenance works. He sells his property for the sum of 300,000 euros. If Mr. X had bought this property in his own name, he would pay about 4,000 euros in capital gains tax when selling the property. On the contrary, if Mr. X had bought his property with a British company, he would have to pay the sum of 45,000 euros in corporate tax. The goal of this video is not to discourage all purchases of French real estate with a foreign company, but simply to warn our subscribers and their advisors of the heavy fiscal consequences that would subsequently arise irreversibly. We are at your complete disposal if you would like to discuss the project of purchasing your French dream home, whether through your company or in your own name. You may also want to consider other tax options. Thank you for your loyalty, thank you for watching, and we look forward to seeing you soon.